It is Wednesday, October 26th. This Wednesday was a Wednesday for me, but it was a small winning day. Um, you gotta take what the market gives you, and in this case, I actually had quite a few opportunities that I missed, but I traded okay. I'll show you my. So I had a 69% win rate based on 26 trades with a net P&L of 223.62, trading 6 to 8 micros. Um, I ended up paying $44 in fees due to the micros. That's the one problem with trading micros. I am slowly getting more comfortable with trading the minis, but not on days where I don't start well. So the way I've been doing it so far is I will start the day smaller, see if things are working. If they are working, I will go ahead and move up to the minis, and then that way I've got a little bit of a cushion too, um, in case I make a mistake. So it's on days like today. What you'll see is I actually started the day poorly, and then had to work my way back. So considering how the morning started, um, I'm happy with the results, but there's a lot I can learn from. And I also noticed today that ES, and which is down here, and NQ, which is the big one that I usually trade, they are not necessarily trading in confluence with each other like they usually do. So I know from experience that that typically results in more challenging trading, setups that don't necessarily play out how you expect, just like strange sequences that I'm maybe not familiar with. Whoops, I think I moved this. Hold on. There we go. So the ES is down here and the NQ is up here. Now they're not linked. So if I move the NQ, you can see it's linked with the other NQ chart. It's not linked with the ES chart. So what we can do is we can go through NQ, and then I'll leave ES alone. But once we get to a point, an interesting location on NQ, if we need to refer to ES, we will find it. Because what ends up happening, here, I'll show it to you on the candlestick chart because it's easier to understand. So that's ES, and this is NQ. And so these are both the 30-minute charts. Let's see if I can get this aligned here. What I want to show you is that they were not lined up. So you can see the direction in general was aligned. If you got a green candle on NQ, you probably had a green candle on IES. If you had a doji, you probably had a doji, right? There were some places where that wasn't true, but generally the same moves. The difference was the location. So if you look here, on ES yesterday, we closed at the highs. We then got a after hours earnings dump that resulted in a gap, and that gap put us back about a quarter of the way from the open of the day. Then you take a look at NQ, and because it was due to a Google earnings, what happened was the drop took out more than half after it opened, took out 2/3 of the day, right? And so when NQ continued lower overnight, they got into the support that was set up the night before in Globex, and that was also resistance from Monday. So Monday night, Tuesday support, right? Tuesday night support. So hopefully that makes sense. We renegotiated that area. In the morning, we traded below it, trapping everybody at this low, trapping the shorts, and then ripped higher into lunchtime. We got over the value area of yesterday, and or not of yesterday, of yesterday's consolidation. We got over the value area high, and then reversed when we couldn't hold it. Um, and we tried to stabilize in the overnight area as well as in the open. So this bounces from the New York Open. And what was interesting about the close for NQ is that we traded lower, but we did not take out that low. And what I said, I actually bought Apple puts towards the end of the day, saying if we don't take out this low before the market closes, and then we do take out the low after the market closes, the gap could be pretty intense because buyers will want to put their stop here, but if they have to hold overnight, they will end up opening tomorrow under their stop, and that's always a fun place to find trades when you can find situations like that. So now let's look at ES. ES, like I said, gave away just the top part of the day yesterday. Traded back down into about the 50% back of that first impulse move, bounced, never returned to that level. See that? This low was a higher low from here, and then we just made higher lows from there. No traps. Came up into the, this is, I think, the same idea. Yep, it's, this is the same place, the value area of that same consolidation. Did the exact same thing, tested above the value area high, rejected, but now, since we are aligned with yesterday, we had this support, which used to be resistance, and then we had this voodoo range level, which was near the open and also near the overnight resistance that they ended up bouncing off of. But notice the big difference is how long these impulse moves went and how much of these moves were given back. Right? This one got up to the highs. It didn't really get over that. This one went quite a bit. ES went quite a bit over the high. NQ couldn't reach yesterday's high. NQ took out overnight low. ES didn't. So all of those inconsistencies are going to cause trouble, potentially, because you're going to have situations where you're trading NQ and your read is that it's bearish and there's no support at this location, yet because ES bounced at support, NQ magically bounces. And that can get pretty frustrating. And so it's important to keep an eye on both markets. A lot of people in the Trade and Perform room actually trade both markets. I have tried trading both, and it's kind of tricky. Thankfully, ES isn't very fast. What I usually do is I figure out what the conditions are and which market is beneficial, like optimal, and then I'll just trade that one, but I will watch the other market and make note when it sets up to see if I can find a setup in the same direction on the opposite market. But yeah, it can get kind of complicated. So overnight yesterday, we had the gap down. I'm not going to go through every single setup overnight, but I want to show you how these patterns do just continue to repeat. And I'm also evaluating still how these arrows, and then I added some new up and down arrows too, how they're working. So for instance, here we're bearish, right? It's a bearish impulse move, bearish gap, and we get bullish arrow at location, which is this purple pivot. But that location would not be expected to hold if it's got momentum. And so it does create an immediate response, but when they come back through it, they do not hold the low. And there's nothing to do there until they retest it. Now this or this could be a short because you had the arrow, you got under it, you returned and rejected off of that old support, new resistance, and then gave an algo signal like a star or like an arrow down. And when you're bearish, those arrows down can create immediate moves. Note what they did here. An aggressive trader shorted into the low. That star is a sign of aggression. that aggressive trader quickly got trapped, and this aggressive trader had a lot of volume. Look at that, tons of volume at the low. So what ends up happening is you get a retracement of this wave here, this move here. Hi, cat. Come here, Ronan. Come on. Come here. Okay, so the yeah, if you look at this wave down, it's technically this is the wave to the low. So once you've gotten above that last wave right here, once you've gotten above that, according to Simon's teaching, your easier trades are going to be to the upside. It doesn't mean get long, but it means start looking for trades to the upside. Now, what's interesting though is that we didn't get over this important level, which was where the single print started and the gap. So we approached it, we got pink bar, orange bar with that, and so that's usually bearish. And you can see that they tried to push and just couldn't get through these trap shorts. And the result is, once again, they try to push, it fails. The green bar here is what ends up lifting us. And you could have just held that pretty much the whole time once you got in here. It feels late in real life because this is like 20, and then you've got 2 hours later. It just looks like it's just gone straight up. And then you see the short, and you're like, well, I guess I could give it a try. And it doesn't do anything. And then it's another 3-4 hours, 4.5 hours before you get the signal. So at the time, it feels late. It feels like you've missed it. But yeah, I probably wouldn't take this one. But you could. Purple bar star. It's got a pink diamond, meaning there's a volume anomaly on it. So oftentimes those lows will get taken out. But when they pull back and they can't take out that low, like they approach it but they can't take it out, and they print another one, pink bar, or pink diamond, it's usually good to go. You can see that now the shorts stop working, all the lines start turning up. You don't want to be shorting every time now. Now this one can technically be a long. It's pretty dangerous because you're at the high day, but it works. This is a little scalp. You can see we can monitor the strength of the trend by looking at the bars with arrows, like this too, and then the triangles that follow them. If there's a triangle right after it, that triangle getting the market, if the market keeps getting saved at this level, it can keep going higher. So see, I knew where that level was before it was there. See that? Because arrow, triangle, right after each other, I knew that if we pull back and that becomes new support, that's a buy. So right there, that green bar is a buy. Now, this time it didn't go very far. And that happens, right? Sometimes it's just the end of the trend. You get another arrow down. Now, the other way you think about this, no, I'm right. This is right. And so now we get another arrow down. So now this needs to get shifted, I believe, down to there. I'm not sure if an arrow here, I've seen this pattern work a lot where it's arrow in one direction, test beyond it, test behind it, and then that same signal shows up a little further. See that? I've seen that be an immediate short before, whereas this is the opposite. Like, you don't want to short that. Let me see if I can find it again. It's two different colored arrows. We'll watch for it. But it's basically the same color arrow, one and then another one beyond it, not behind it. This is behind it. Like, if this trader is winning and they get another arrow, I believe that level is now. But the normal way to do it is to put it, no, I think it's here. So if you got, because that's also the triangle. So if you get a pullback into that level, you could technically short. If you didn't want to sell the breakdown, you'd short here. And maybe here. Yep. So that's a short. Now down here you've got a blue arrow on a speed bar that's green. That's pretty strong. But the better play is to wait to make sure this low doesn't get taken out. And as long as this holds and you get another aggressive signal, it's usually good to go even if you don't test below it. Oops. So this, because it couldn't break it, becomes good. Sometimes you need a couple tries. Here we go. Arrow down, arrow below it. It stops you out, and then I bet it goes. Wow. Okay. So it's not always clean. It's not always clean. Anything else going on here that I could have caught? All these orange bars in a row is kind of weird when it's so flat. Like this one technically got your risk off at least. This one looks like it stopped. This one definitely stopped, and then it goes. The only thing I can think of is that the dashed 2-hour VPOC, you can see we tried to give it up, and then they couldn't stay under it. See that? They kept on getting back up, kept testing below it, getting back up. And so what you could say is, you might not be able to short that with that technique, but once you get under it right there, you'd know now it's bearish, and now rejection, any retracement. Oh, it doesn't retrace. Right there. That's your short. So, even if you didn't catch this one, which I think is kind of tricky. Okay, let me erase the line and start over. Alright, so this is a short. It's still bearish. They did try to trap this guy. They just let him go. So see, this would be a very aggressive buy because the momentum's to the downside. We're on Central Time, so this is an hour before the market open. I'm probably not trading here, but here's that pattern again where you have arrow. Oh wait, this one went the wrong way. This is behind, so that's definitely not a buy. And plus they're going the wrong direction. Yeah, so that might actually be an opportunity to sell. No, it's just don't fuck with it. Okay. They try to bounce it with a green bar off the purple pivot. That level is obviously important. They try to reject with the orange bar, and it works. You got 2 opportunities to get in there. So here you could say blue arrow, extend further, blue arrow, and it's definitely not bullish. In fact, anything under here is probably dead. So that signal is a little bit more complicated apparently. Usually the way I use this is if it's up bar, I say if we can get volume below this and reject off of it, it will be bearish. And until that happens, it's bullish. And so that same thing could be said here. If we can get volume below it and then we reject it, this should be bearish. Yep. There it goes. So if you pay attention to those arrows and you're good at like being patient for the trade to set up, those are great signals. If you're more of a person who likes to trade with immediate interaction with the market where you see the signal and you immediately fire, well, then there's the orange bars and the stars for you, right? There's different ways to trade the same system. So here they traded underneath this low volume node, immediately rejected below, sending it back up to VPOC of the 2-hour, developing VPOC. They rejected that with an orange bar and a star. This has like every algo possible. It's like a volume anomaly, star, orange bar. If you were bearish, that's when you take it. But the problem was it was 2 minutes after the open. So I'm not going to trade then. The location was good too. It was off of that purple pivot. Everything about that was good. It's just that it was the open, and the open is not always predictable because there's so much new order flow. So they give you another sell signal here, and it appears to work at first, but it runs into the low volume node and it bounces. This was technically the first buy signal, but you had to be pretty brave. But if you had that location identified as a spot that they rejected lower, right? They said no sellers below here. They did get above this purple background. It started here. And once they do that, that level, just like the arrows, that level tends to be good to go. Now this one bounced and rejected. You would have had to try it twice if you were using that technique. But if you waited for the star, you got in really low. Now, the other thing you can do here is you can measure the volume of the last bar and see if you can get over that and then get a signal. The volume of that bar is here. We did not get above that volume until here. So once we got the yellow VPOC line where all the volume is above this VPOC of the wave down, we know they're developing volume above that those trapped sellers. So now if we get a green bar or a star up, we can buy it. So let's see if we do. I don't, there, right there. So that is the best on process entry we've had so far. It was within the first 15 minutes of the day, and I did not take it. And I was disappointed that I didn't take it because it would have gotten me a nice move. Here we put in arrow, lower arrow, and this time it worked. So I don't know why sometimes it seems to work and sometimes it doesn't. There must be more to that signal. But when it's an arrow and then it retraces and it can't get to the back, and then it turns around and gives you another arrow, that can be an entry. I just don't know how often or if it only works in chop basically, or what, because it didn't work earlier. So that gets you a little scalp. Note that it trades underneath the green bar and then bounces right back up with a star. That is definitely an entry. It's called an apex trap, and then it's also a trap star. If you look here, that star got trapped. This one, what I almost took, but it was still within the first 15 minutes, so I skipped it. I'm considering making some exceptions when you have this much confluence. Notice this same level with the top of the purple background. While it created one stop here, it got you long on this one. You might have missed this, but you get this one, getting you amazing trade. So when I have that much confluence where everything's working together and everything's lined up like that, it might make sense to take it, even though it's in the first 15 minutes. I don't know. When I missed those, I started to get flustered and frustrated, thinking that I was going to miss another trend day. And because of those thoughts, I did not take this. But this is a valid setup. You can see what happened here is we had a wave to the high into the single prints in the gap. The volume on the wave to the high was way down here. You can see how these pink bars came up here with sellers just giving up as they rise. So getting volume below that would set you up for a short. I didn't want to be aggressive and take this, but you can see that it worked pretty well. Okay. Comes back down to this level, puts in an arrow. What does that tell us? Well, if we can develop volume below this, we know it's bearish. And they cannot. See how it traps the star and it comes right back out? So now what I want is a pullback to buy. Pullback to buy. I wanted a pullback to buy in this range. Guess who didn't buy this? Yeah, me. The other thing that I did wrong here was I was so anxious to get into trade that I saw that we developed volume below this wave to the high. And my first thought was, I want to short any orange bar. And I forgot or didn't pay attention to the fact that volume anomalies at that level would make that trade no longer valid because it's not an identified resistance. It's just a VPOC point. Additionally, because this guy is trapped, the likelihood that we trade right through him on the first try is low, and we had this level that's acting as support successfully. That would be a much better trade just to wait for the long down there. So I don't like my short here, but I took it, and it got stopped, right? I could have taken it again here because it was at the location. I didn't, thankfully, because that would have stopped as well. You'd think I'd just stop shorting at that point because that would make a lot of sense. We're now above this. But I did take another short stop. But at this point, we should know we're bullish. The green bar got us going. The stars will be scalps to the upside, and diamonds now are good to go as long as everything's to the upside. Downside moves, like stars to the downside or red diamonds to the downside, they're just like cannon fodder to try to get trapped. So we have to watch them to make sure that they don't actually produce any extensions, but as long as they're just kind of firing the single bullet and then like immediately not falling, we're going to assume it's still bullish. We get another green bar, but it's not positioned very well, and it's got a bunch of if that was there. I don't think it was. The delta. So yeah, this is not positioned very well, but it just fires higher. So I took this because it was at the voodoo range level. It's kind of stupid. I don't like it. I wish I wouldn't have, because I was already down in the day. I've seen this work before where you get the pink background and then you get a orange bar with a red diamond, but it only works at location. I was thinking that it's a trap back end of this level and it's at the voodoo range level, so it might work. The problem is that momentum's clearly higher and shorts are definitely trapped. We're inside of that gap, and there's really no reason to think that they're just going to turn it around for no reason. So I should have snuffed that out, but instead I took a stop. Then I was licking my wounds and decided that I was only going to take longs, so I missed this. Of course, right? If you take this one, you're always going to miss this one. So, and then, okay, so then once that worked, I really didn't know what was going on because I didn't have a good sense of whether or not we were gonna, with that gap and the fact that they were not aligned, I didn't really know what to do about that. So I just figured wait until I do know what I'm doing, which is not a bad idea. So I did not buy this, and I rolled. But then it set up again, and this was a valid trap. See that? So that one I took, and so that got me back to break even. I did not hold, I held some of it, but I didn't hold it for as long as I should have. I took profits quickly up here, and then as this orange bar came in, I took more profits, and then I decided up here that I was going to hold. Some people were talking about getting short here, and when we started putting in purple bars, I just gave up on my runners because I wanted them to be winners, which was not good. I'm supposed to hold that there. So you can see that the purple background identifies where bulls would potentially take over if we get over it. That happens right here. We test below, we rush out, and we can't get below it. This is a buy. It doesn't work, but this is also a buy. I might, you know what, I might have let go here. Now that I think about it, I think I did try to hold this, and then we got orange bar, pink bar, orange bar, and purple, followed by purple, and I got nervous and didn't want to give back all my gains, and so I actually let it go, which was frustrating because people in the room were taking this long, and I should have just gotten right back in. Now this is interesting because it's blue arrow with a diamond pulling back underneath blue arrow with a diamond and then coming back with a blue arrow. So the way to think about this, I believe, is that the blue arrows identify spots where bulls can like suck up liquidity below and still hold on as long as they don't close below. So if you if you test below that without really getting any volume below it, you can bounce. Well, same with this. If you test below it, but you don't get any volume below it, or if you do, you start to bounce, that's going to be a continuation of what was supposed to be a valid entry. So this is technically the entry, but they squash it. They test underneath it. Why? Because it's got a pink diamond, meaning that there's a volume anomaly. When there's a volume anomaly, the market likes to come back and check it out, make sure that everything's good and kosher, and that the buyers are where the buyers are supposed to be. And so to do that, they generally trade behind the back of that bar. So if you see the pink arrow, it's never a bad idea just to wait, especially and wait for that second try. If the second try is a pink diamond, it's okay to take it because it's already established support. So like if this one was a diamond, it'd be fine. Or if this one was a diamond, it'd be fine. This one's a diamond, you don't take it. This one's a diamond, you don't take it, right? Like if it's the first time you're into an area, you let the market settle the negotiation, and then wait for the signal that it's done and that you've won, which is that next trade signal. So like I said, here, because we got the arrow, we knew that anything that got sucked, that any liquidity got sucked up down here, if they could come back and bounce, it could create an impulse move. Well, then they put in another arrow, meaning if they can get below this, it could do it again. Now, I don't know how often that happens where it's two in a row, but what I do see happening a lot is this, where you get one and then you get another one and it immediately runs. So this yellow one, you could put the line right here and you can say that if they sell this, that it could be bearish, right? And then there's one here too. So if they sell this, well, then it could be bearish. Guess what? You get a trade. Now, these are only scalps. These are only scalps. And once you get through the area, it's all over. Now, this time they come back in. Where do they come back into? This same arrow area. They put in a speed bar. Bounce. Where do they come back into? This area here. They test behind it. They can't get below it. See how the yellow line stays above the green line here? As opposed to this one? Here it can't get below it. Right? So it tries to go higher. I did not take this because I was burned by the shorts, but technically pink bar, orange bar in this kind of scenario is an okay trade. It's just it doesn't always work. But this time it did. So now I was like, okay, we're obviously having a balanced day. I should just take every trade that develops on the edge. So we took this, and that one worked great. Or no, I missed that one. I didn't catch on. So that's right. We got this one. I skipped the short, and I had already exited my longs because I exited the long here. I was happy about that, and I was like, okay, we're balancing, so I just need to take every setup, and I was distracted here, and I missed this one. Someone called it out in the room, and by the time they called it, we were here, and so I didn't take it. I said I would take it if it pulled back, and it never did. Matt caught that in the room, and holy shit, was that a great trade. So good for you, Matt. Notice we put in a yellow bar here, yellow arrow, meaning that pullbacks into that area can be bought as long as it's bullish. So those, you can buy it right down there. Now we get a red bar. This is a new idea. This red arrow, we can put a line right on that red dash, and it can become a support resistance pivot later on. Notice we come up here through the gap in the single prints, and they just keep going. They put another one in, only on the other side. Okay, notice there's no trade to do right away. You have to come back and bounce off of it. You do not want to short when it's doing this. We come up to the POC of the previous day. I generally do not trade around that. So had I been long, I could have held, but I could not get into new positions. So I did not short this. Technically what it's saying though is that it's bearish as long as they don't develop volume above that, it's bearish. So it's an okay trade. It's just near the point of control and it can get choppy. Notice they came back to the single prints and they bounce with a volume anomaly and a star. I normally would not take that, but if it dips down and then bounces there again, I would. This time it just happened to work. Here we had an apex trap. This is a great trade. And it works a lot, and I took it. I got 10 points, and then my runner stopped out. Indicating to me that shorts are no longer working, despite the fact that we're not like screaming higher. Like, I know not to short this, and I usually don't even short this either, unless I've got another reason to. Like some kind of symmetry or something with another chart, or I'm usually just going to skip that one because I can trust that if it's bearish, I'm going to get another opportunity on the pullback. Well, when it pulls back and that pullback doesn't go anywhere, see how this trade should be really strong when this happens. If this is bearish, it should take this low out. So when it doesn't, when instead the runners stop out, you need to stop shorting. And so Simon in the room, our coach, recognizes it right away. Actually, he was talking about it all day, saying like, I'm not going to short. You guys can, but I'm not going to do it. And once this happened, he's like, see, this is why we shouldn't be shorting, and I should have listened to him, right? But we are on the POC, so I'm not really thinking about taking trades here. Anyway, I shouldn't be taking this because it's the POC, so I'm not supposed to take those. Actually, I don't think I did. I think it was this one I took. Because I don't trade at the POC, and I don't remember scolding myself for trading at the POC. I think I took the next one. And the thinking here was we had a yellow bar, which traded below it with a volume shift lower. Oftentimes, yellow arrows followed by orange bars or yellow arrows on orange bars are generally pretty safe spots to sell. This one stopped out. Again, I was warned that the market was bullish and I probably shouldn't be shorting, and I did it anyway. Now, one way you could trade this is rather than shorting it, you could say, okay, I think it's really bullish, but it's not bullish if we get, it's not bearish if we get behind it. So rather than putting it here, I could have put it here and said, okay, I've got two locations where I can get long. This one behind this, which is here, or this one behind this, which would be a pullback into that. So here, both of those would have worked. Instead, I chose to short and got stopped out, giving back a little bit of my small winning day. So notice the dashed line is the 2 hour VPOC, developing VPOC, and the yellow, the blue, that's the blue dash. The yellow solid line is the VPOC of the bars. Notice what happens when we get underneath that blue dashed line, and then the buyers immediately respond, pushing price higher. That's extremely bullish. You can see it happen there. This one, they don't even get the yellow underneath the blue. Just price goes underneath the blue, and they immediately jump. Still bullish. Here, they try to push down. Price gets back up. Guess what's bullish? Right? Bullish. If that yellow line can't stay underneath the blue line, see how it gets under it once? So now, this is the first time we've gotten a bearish bar with a VPOC underneath the blue line. What does that mean? I'm supposed to stop being aggressive, and I can begin to filter in some counter trend trades if I have the setup. So I may take this one, but I may not take the next. So I can put this line here. That's a potential short setup later on. We are still aligned with this. So any of these bars are good to go. This one, we traded below. See that? We traded below it. Here, let me start over here. So we put a blue arrow all the way up at the top. Generally, the rule is if you get below that arrow and establish volume below that arrow, sorry about the cat, it's a possibility that you could be reversing. And we did definitely do that here and here. So at any time here, we should expect that we might be reversing. Now, in addition, we put in yellow lines. So the good news about the yellow lines is if you're still bullish and you develop volume above this and then bounce off of it as support, you can buy it. But if you reject out of it, you can sell it. So what you'll see is they reject out of it. And what I wanted is a retest. And I got it. Retest. It tested above that. That is the sell. And it's beautiful. And it worked. So that worked out perfect. I just had to, all you needed to do to manage that trade, you wouldn't even need all the algos. All you would need to know is where's the 2 hour VPOC, where's the VPOC of the current bars, and where's that been? And then you're just waiting for them to develop volume below, to get that VPOC below the 2 hour volume, 2 hour VPOC, developing VPOC, to get them to push it in there and close a bar bearish, which happened here for sure. Now the next time they retrace in here, they're going to try to short this. You don't know if they're going to sell it immediately or what, but you can, if you get, I got one of the better trades that we use on Trade and Perform, which is the Apex Trap. When that Apex Trap shows up there, I'm definitely taking it. So that was a good short. Okay, let me back up a little bit. So now I started the stream shortly after this, and I was short on this one, and short here. Actually, I don't think I caught this one. I think I caught this one. I should have gotten this one. It was this that I caught. I caught the retest, not the Apex Trap. I don't know how I missed the Apex Trap. I guess I just didn't take it. I was waiting, but I just remembered what I did. I was waiting for this I wanted this blue bar to get tested underneath, and I wanted to see volume getting developed underneath that to be sure that dips were going to stop being bought. Once I saw a blue bar with and it technically happened here, blue bar, blue arrow, tested below it with volume. Now the dips in this area should not get bought. Now this one did, but it didn't make a new high. So I shorted this, and what you'll see is it's going to head towards the POC. I should have held a contract or two, and I meant to, but I had to be away from the keyboard, and I chose to exit the trade as it was coming into this purple bar here, because I figured we're probably going to bounce on the POC, or at least chop around, and that I aggressively entered. Had I entered here, I easily should have held those runners and just taken profits in here, and then just held the runners for lower. Notice here we got an absorption signal, so what that's telling us is race lines. So it's a little different, kind of similar to the arrows. We're going to mark the little blue dash. That's where buyers were absorbing. The idea is whoever owns this level will probably use it as a pivot. So once bears own the level, they'll use it as a pivot. If buyers can take it, they'll use it as a pivot. So I didn't need to get out of this. It did start to bounce. I didn't need to get out of this because if you look, they could not get the yellow line above the green line, and especially not on a bullish bar like a white bar. The only time they even got price above it was either a pink bar, which is a sign of sellers giving up and pulling orders, not necessarily buyers aggressively buying, or a wick that closed lower. This is a sell, and I missed it. I was setting up the stream, we were reviewing the day, and I just missed it. But notice here with this absorption arrow, we traded under it, we came back up to it, and we rejected off of it. So that becomes a really good short. You could also short this, but there's no algo signal, so you technically have to wait for this. Hold on, I hear my cat getting into something. He's kind of naughty. Let me make sure he's not going to hurt himself. I'll be right back. What was that? What are you doing? I'll tell you. Cats, man. Okay. He's fine. He's just playing soccer with the tissue box. So, oh, and then here, if you want to look at that VPOC setup again, so see this 2-hour VPOC here. Just watch the yellow line and how it reacts to that blue dashed line. See how it tries to bounce here, and then clearly gets underneath it. Once you see that, these shorts are going to start to work. And this works on ES even better. Let's see that. Now the yellow is clearly below it. Now what's going to happen is the dashed line will shift lower, and that usually results in a pullback, and that pullback then will set up another entry. So here, I wanted that dashed line to come closer to here, because otherwise you could be shorting in the hole, and I didn't like that I was shorting right into the VPOC from yesterday. I realized just as this was printing, I said it in the stream, that all of these guys who bought at the highs are now potentially trapped above the VPOC from yesterday, and we're probably buying, hoping that we're going to head to the high from yesterday. And what I should have done, this would have helped a lot, but I didn't do it. But I thought about it later. If you measure this move, I might have done this, but I don't think I did it late like this. So when you measure this move, what I had said in the stream was if it's a trend day, I would need at least a 38.2% retracement to even think about getting long, right? So if we might have talked about this already in that actual stream, you can see it. But the idea is that this green bar, if you're still bullish, could technically be the bounce, right? When that one fails, generally what they do is they take out the 50% and they set it up at the 61.8. So you can see here, they tried to bounce the 51, they come all the way down to the 61.8 and they put in the buy right there. That would be your ideal buy if you think it's continuation. So again, let me just zoom in again. So that star that bounces off the POC, that's your buy. If you're bullish still, that's your buy. And there's really no great excuse not to get it other than it's at the POC from yesterday. The other, of course, if you have more signals, you can see that we're trading underneath the absorption spot, and that absorption spot where buyers were absorbing sell orders has now become resistance. So yeah, it was a good reason not to take the buy, but if you didn't see that, you wouldn't have known to expect this, which then shot us lower, right? I had a couple chances to get this short and did not re-enter. I did get it, like I said, I did get it here, right? When we rejected out of the 2-hour VPOC, I did get it there. The problem was I had to be away from keyboard, so I exited on this bar, and I only got like 20 points out of it, and I easily could have re-entered right here, but didn't, because I just didn't see the potential of getting through the VPOC and what would happen if we did. So once we got under VPOC, what I was hoping would happen now is I wanted them to see them come back up and reject it and then roll over. Well, guess what? They just didn't set it up. So I didn't make any mistakes beyond this, beyond not selling this aggressively. I didn't make any mistake here. I did not buy it. I knew not to buy, but I didn't get the setup I wanted. Now, something I've shown before with these purple and pink bars, when you see pink bars on my chart, pink backgrounds on my chart, what you can generally do is imagine that there's a line at the bottom of the pink chart, pink background, and then roll it up. And if you can get buys off that level, it's usually good. And when they give it up, it's usually done being bullish. See that? Same with purple. Purple's here. You can sell if they return to that level. But if they beat it, done being bearish. So now it's here. It's the first one. So see how they try to get up there? It's only a pink bar. They can't get the yellow line above the green line on a white bar. Once they get the volume above that green line, it turns pink and then it reverses. So that becomes a short. And then you can see they try to do it again. They get it above and this becomes a short. So that would have been another way to catch that, and just a way to stay safe and not be bullish there. Is just to remember that the conservative way to play it is to not buy until you've gotten volume above that purple background. So now that purple background shifts even lower, and it's basically just showing momentum. So it shifts even lower, and you can see that they can't even reach it. They try to bounce, and they just totally, utterly fail. And now that it's this heavy, what you technically can do is short the breakdown of green bars, especially if they're at a level. This was, I think, a volume anomaly on the profile chart. So I could have shorted this star, and I didn't. And I think I even said, hey, that's a pretty aggressive entry here, but I don't want to shorten the hole. I didn't want to give back what was an okay day, especially after starting the day red. Note here, we put in another absorption arrow. So now that's potentially a pivot in the future, right here. So we're going to watch for that level. But note the purple is started all the way up here, the purple background, started all the way up here at like 92, 93. So we really don't want to be bullish unless we want to target this, because we should expect sellers to show up there. So as you can see, we just had no choices whatsoever other than stay short. If you're short, I unfortunately had already covered. It's something I'm trying to fix. But like I said, the life got in the way today and I had to step away from the keyboard and did not hold it. We put red bar followed by green bar. We were in the, oh, and here's another green bar. Whoops. Green bar getting traded below. So you could technically short this too. But as you can see, these really need to be quick. When you get red bar followed by green bar, generally it's a pivot zone. But notice that this red bar has a purple background. So what that means is that this level, whoops, can be moved down to here at the Voodoo range level. And now if I can get volume up here on a bullish bar, I can expect it to bounce. Unfortunately, since it's red bar followed by green bar, it's going to be choppy. It's going to develop a pivot here most likely. So I don't want to take trades on bars that close in the middle of this pivot. I just ignore them and wait for volume to either get beyond or one way or another, right? If you are going to take a directional trade, make sure it's with momentum, which would be short from up here. What I wanted was a test above this, and it literally missed by like 3 ticks. It just didn't set up. Could I have shorted this? Yes, but I don't think... You know what? We did take that short. I did take that one. That's right. I'm pretty sure that's the one I did take, and it extended. Yes, I did take that one. It was the next one that I missed. We did take this together, and that worked out nicely. So now you have to keep track of whether or not you want to consider buying these. And I decided to buy this. So we shorted this one. We got a nice little piece of it. The way I looked at it was this was Monday's close, and we had traded below these previous lows and bounced, and then they tried to sell it and they tried to bounce again. I took it with small size because I've seen this work as a low. Now, the other thing you can do to see if it might be the low, 3 things. Number 1, figure out where the top of that volume wave down is, which would be here, and go down to wherever it stopped, which at that time it was here. And you'll see that the VPOC of that down wave is this pink bar. To be safe, you don't know that it's going to be bullish until you get volume or the yellow line above that bar on a bullish, above that line on a bullish bar. So here, when I'm buying this, it's extremely aggressive, and it's probably wrong because every time we've actually already tested that level twice and sellers showed up. The other thing I can look at that might have kept me from taking this trade that didn't work is the purple pivot, the purple background moved down to here. So technically what you want now is volume to develop above this. Well, look, they got price above it. Did the yellow bar go above it? No. Did the yellow bar go above it when price? Well, price didn't even get above it. Yellow bar went above it. Price dropped. That's a problem. So I don't want to be long there because they can't develop volume above that momentum pivot. So instead, it's short this. As hard as that is, any green bar followed by a bearish bar in a bearish environment, a green outline bar that's followed by any other bar to the downside is usually short. See, this one goes up, so there's no short until here. But when you get a green bar and the immediate bar after that is bearish, you can short this. Green bar, immediate bar after that is bearish, short. I mean, that's a beautiful short. Yet, like I said, I wasn't prepared to take it because I was thinking about catching the low and subconsciously thinking that this even though I have no evidence that it's going to hold and I've got no reason to think that they want to go higher, that we came into a level that I like and the algo gave me an aggressive opportunity to get long and I just took it. Had I not taken that, I'd be up like almost $400 and I probably would have taken this trade because I would have been oriented correctly and probably would have been up 500 or 600. So the difference between making 200, whatever I made, 260 and like $500 are these tiny little adjustments where it's like I skip this long trade and take that short and suddenly I'm making twice as much almost. Okay, so here we came into the purple pivot. We saw this act as resistance overnight or support overnight. They tested below it, but they put in a purple bar and immediately came back up with a green bar. You can see here we had a down bar that had a blue arrow. So you could put your line here and say if we can develop volume above that, it's probably bullish. But what's interesting is that when they come down and they give us another blue arrow, especially on a green bar, they tend to rip. We saw this in the inverse with a yellow arrow and an orange bar, and it did the exact same thing. So that one also had pink or purple bars before it. Here, I'll show you. It was back here. So now this one didn't work, right? We had a up, but it wasn't immediate, and there's no pink bar. Okay? But this one, arrow with pink. Oh, that's not quite the same. I was gonna point to this, but that's not quite the same. There's no arrow on that one. There was another. And it was definitely to the sell side. Where are you? Like I said, it's important to really dig into these signals when you have it on your desktop. Arrow, the orange bar, pink bar, arrow lower. Pink bar, arrow lower after, or pink bar, orange bar lower after arrow. I thought there was one that was arrow and then later arrow on an orange bar. See, this one does not work. Arrow on an orange bar comes back in, arrow on an orange bar gets beat. There's no pink bar here. Okay? Usually you want a pink bar before the arrow, before the orange bars. God, I can't talk. No arrow until here, but that one does work. There's no pink bar. Okay, here's a bunch of arrows where we're going up. So pink bar, orange bar with arrow, goes a little lower. No pink bar, arrow, orange bar, doesn't go lower. Doesn't go lower. Doesn't go lower, right? So it looks like that pink bar before might make a big difference, at least recently. Let's see what happens on the other side. What about blue bars with purple behind it? So this bar is pink, and it's got a star and all that. Like, it's got other things that might have made it go up. So we'll skip that one. It might not have anything to do with that signal. I really want them aligned. A blue bar, and then a little space, and then a blue bar, or blue arrow, space, blue arrow. And I want to see if see purple bar, green bar, blue arrow. Maybe it doesn't matter what happened before it, as long as it's not super bearish. This is a pink bar, and it's an arrow, and that lifts. That's the second time we've seen that work with the diamond on it. But it has to be located in the right place. Yeah, see this one, there's no pink bar, so it rips. Here we go. Arrow, purple bar, green bar with arrow, and it fails. Only to see it work later. So it's obviously not going to work every time. But, oh, this one was on a down bar, not an up bar. So that's similar to what we just saw now. Interesting. Okay. Orange bar works. Pink bar arrow works. Arrow, pink bar, orange bar works. Purple bar, arrow works, right? Was there an arrow over here? No. So this is the first one, yet it still worked. Purple bar 2 behind, and no arrow over here, but it was a trap trade. So that probably would have worked even without the arrow. This one, no pink bar, no arrow over here, star and yellow arrow tries to work. These are arrows going in opposite directions. I assume that's just a pivot. Oh, here we go. Blue, purple bar 2 from behind, and then blue, and it goes. And then these two are kind of aligned as well. Okay, and then we go higher. Let's see. No. Okay. All right. Just wanted to see if there was a pattern recently with that. I'll have to keep watching it. But yeah, so it's blue arrow going down, and then purple bar, green bar with an arrow going up. But I really do think it's not that useful until it gets over this purple. Once, like, whether or not this actually bounces, it probably has to do with the fact that it traded under this purple pivot, but couldn't put in any significant volume down there, and then immediately got a bounce. Come on. So, but notice it does develop volume above the purple background. So now when it dips, that's a long. See that? And then you get this. I we saw it and I didn't put two and two together to buy that. It felt too extended right away. I wanted a bigger pullback, but now looking at where the purple is, that's the right spot. What about this purple pivot? This purple. So the background stops here. Get volume above. You'd have to bounce off of it, and it doesn't. So now what happens? Arrow down, or blue arrow. See, no arrow. Purple bar star rolls over at the arrow. See that? It can't continue the momentum. So that's bearish. I don't know how to catch this. Let me just check. Did we have an apex trap? Maybe. Pretty damn close. So that might have been what that's about. Otherwise, you'd have to measure this, and you'd have to say, I need to develop volume below that, and then get a pullback to sell on an orange bar or star. Gets below it, just orange bar. So that's your sell right there. Yep. Okay. Makes sense. Like I said, it might get boring because all it is just the same thing over and over again. It's a matter of recognizing when to apply the process and how to stay focused on just what you're supposed to be doing, because there's just so many things you could be doing, and so the trick is to start one at a time. So notice here's that VPOC, right? That 2 hour VPOC shifts down. What did I say happens when it shifts down? Volume or price returns to it. And where is it trying to go? It's trying to see if price can get back up to that level where it came from. So price will head up there. So what we can do is when we see them reject before getting there, if it's bearish, that is generally going to drop. And you can see it too because it gets inside, it gets the yellow line above the blue dash line. And you can see this is a bullish bounce, right? That looks pretty good. And you can technically scalp that. But look what happens. It just falls out of bed. And it can't get back up there. And it never gives you a chance. You know, now it should be magnetic. This level should be a magnetic. It should attract price. See that? Pretty cool. And then the other thing you can see here is there's a pink background. So if you were looking for opportunities to short, you could say, well, I know if I develop real volume below that any pullback would be a short. Developing volume below that with aggression happens here. And so again, that would be your short, or else any short that follows in that area. I really wanted it to go a little higher than that. And if I remember right, I skipped. That was the one I felt like I missed, that I literally looked right at and was like, oh yeah, that's a short, and didn't do anything about it. Suggesting I'm probably a little bit tired at this point. So now we get purple pivot here, purple background inside of the purple pivot. So now we need volume above that before we can really say that this downtrend is over, or at least on this time frame. And you can see that we get a volume anomaly with the green and an arrow. Now there was arrows, this is what I didn't see earlier. There were arrows over here, and we tested below them and then got another arrow. I've seen that work before, but maybe not with a volume anomaly, and maybe not when you're underneath, like in a bearish trend. So I bought that, but now I'm not so sure I should have, but I did. And it did come up and get my risk off, but look where it gets stuck. Right where the purple pivot, right where the purple background started. So having that system running where I'm putting lines where the purple, that's a very conservative system, but it works really well. Especially during trending markets where you're afraid you might be fighting the trend. Yes, you miss these tiny little scalps, but you're prepared then for this short. And I'm more comfortable selling the breakdown after these little consolidations. So here they do it again. This time it's aligned with the voodoo range level, this purple line. So basically, I don't want to be a buyer unless I can get volume above that. And so you skip this one and you assume that they're going to take it, and then you can just short this. Now, eventually that's going to not work. And if you're going to pick one to not do it, maybe don't do it after they bounce off a low volume node, right? So I don't hate not selling this, but technically it's valid. And then the question is there any way you could buy that? And I think there is. I believe if you use the waves. Yeah. The VPOC is right here. So in that case, you can buy that. You put your stop down here, and it goes. How I missed that one, I think I was focused on the low at this point, and I wanted that low to get taken out before I bought anything. Pretty sure, and then it was the end of the day and all that. So I'm pretty sure that's what happened there, if I remember correctly. And then we started wiggling around in this tiny little chop area. And you generally don't want to be doing trades here. But we can say that we establish volume above. So a pullback that gives you a green bar would technically be bullish. This one was not positioned very well, so it's very aggressive. They got a star. I believe I took that, didn't I? Should have. That's a long. It just didn't go very far. Ran into the purple pivot, rejected. You can see that if you looked at the voodoo range level, they did develop volume above that purple. So you would expect at least somewhat of a bounce if you get one of these arrows. So this does make sense to buy this. If I didn't take it, it was because it was so close to this. But they reject, and like I said, that makes sense. It was the end of the day. They come back to support, set it up again. We get this orange bar is a good sell. If you want to know if you were still bearish, you can measure to the high. This is the high. So you can measure to the high like this, and you'd see that the VPOC for that wave is here. So all you have to do is develop volume below that on a bearish bar, and then you can start shorting star down and orange bars. You get purple bars below only until here. This is your first true bearish bar with any aggression in it at all that gets below that VPOC with the POC of the bars. So the short is here, and that's pretty reliable. Do you then get the continuation here? Here's this again. Oops. So this can become a pivot. Okay, we get after hours spike. There must have been volume down here that got absorbed. It immediately rips higher. Generally, whoever can take that level will be able to use that as a pivot. They fly higher. They try to get rid of them. They shake them, shake them, shake them. Finally, they shake them out. Like I said, the only way I have to trade this is to say it's not bearish unless it can get below the VPOC, which is way down here. So I would not be shorting this personally. Nothing to do here. It's just consolidation. Nothing, nothing, nothing. Okay, there. So now they're below the VPOC. So now retracements can be sold if they're orange. So this. Technically, stars too, but it's more aggressive. The orange bar is better. There you go. There's your sell after hours. Now, another way to get that, if you have these arrows, is you put the line under the arrow. You can see this is a blue arrow followed by yellow arrow. So basically that becomes a pivot. Whoever gets the market out of here owns the area. But look, we had another pivot down here. That one gets taken here because the purple bars don't count. They try to recover it. That's technically a short. It's just dangerous. and it fails. Not surprised. Come back up. Hang out. We have an apex trap here. Okay. Then here, this one, we can now do the exact opposite. We can say this is the low. And so the point of control of that wave is here. So we really don't know that it's going to be potentially bounce until we get volume above that. Now that that's happened, we want green bars and stars up to buy. Stars up, buy, and you get that run. So that's how it's done. And like I said, I'm just doing this every day, trying to get better at it. There's so many signals to learn and practice that it takes a little time to get used to. But the great thing is that even with just one or two of these setups, you can have a pretty consistent day. I had like I showed you, like a 69% win rate. That's pretty normal for me. And I trade. I'm by far not the best trader in the room, right? Like I'm not barely as good at this as you could be. I'm getting better. I'm trying my best to learn, but there are a lot of things that I still need to fix. And yet I've already achieved a win rate of like 70% on a pretty regular basis. I will occasionally lose, but usually I'm getting a win rate way up there. And the struggle I've been having lately is sizing up appropriately and not getting tilted by seeing the big size and not staying relaxed. So hopefully I'll keep learning, keep practicing. I will see you guys next time. I might do a London stream later. We'll see if there's any interest. If you like this, let me know. You can follow me on Twitter at RedBenTrader. And you can DM me if you have questions about the algo. If you want to join the room, it's $95 a month to see Simon's chart and be in the Slack room with us. And then if instead you're interested in actually having the desktop version of the algo that looks like this, instead of $95, it's $250 a month total, which is a killer deal, honestly, because that's like what I average on a day trading this system. With micros, it could be a hell of a lot more than that if I use minis, but my account size is pretty small. So that's the prices. You can come get a 5-day free pass if you'd like. You can DM me, or else you can email Simon. Trade the letter N, the word perform. So trade N perform at gmail.com. Otherwise, just DM me and I'll hook you guys up. And hope you have